This episode of the Commercial Real Estate Investor Podcast is brought to you by Hamilton, a value-add investment and development firm in Nashville, Tennessee, focused on bringing passive real estate investment opportunities directly to your inbox. Visit www.investwithhamilton.com/invest to sign up for upcoming investment opportunities. Welcome back to the Commercial Real Estate Investor Podcast. If you are watching us live, you're probably seeing a little bit of a construction zone going on here behind me. We're actually updating part of the YouTube set. Really excited to bring that out for the more educational videos that we're releasing every week. But today we're interviewing Adam Miller. Really excited to have him on the show. So Adam started off at the University of Tennessee, and then he spent some time at Tractor Supply, where he kind of spearheaded the implementation of artificial intelligence into their whole store system, which we'll get into, is really exciting. Spent some time at a family office as well, one of the largest here in Nashville, actually, and now works at Hamilton as our investment analyst. So he is responsible for putting together our pitch decks, analyzing markets and new product types, and underwriting all of our deals. So today we're going to dive into how you should be looking at your deals, what else you should be considering in the general real estate market, and so much more. So Adam, that was a very brief introduction on you and who you are, but tell us a little bit more about yourself.
So I'm a Tennessee boy through and through. I grew up in Crossville. Yeah, it's a good thing, right? Especially now.
Yeah, it's pretty big in Nashville now.
Yeah. So I grew up about 2 hours east of here in Crossville, University of Tennessee. I studied supply chain, which is quite a off the beaten path from where I am now. Went to Tractor Supply. Was there about 7 years. Kind of cut my teeth on quite a lot of different things. Somehow I got a job with the Corleones.
The Godfathers of Nashville.
Yeah, one of the Corleones, Michael. I ended up here. I think that there's a lot. The city it's magnificent, right?
Yeah.
This is a very exciting time. This is kind of an old boys club. I feel like this is one of the few outfits that isn't quite the old boys club.
Thank you. Wear that as a badge of honor for sure.
Yeah. And I mean, that's what's exciting about it. Is an exciting market, exciting place, exciting team. You're developing quite a unique set of skills, which I think makes us different, right?
Yeah, I love that. We'll definitely dive into that too, because that's one thing that's been really fun talking with you about, is just how different we are from everybody else. I mean, I didn't have any family office experience. I didn't know what that world was like. So just hearing how they look at deals compared to the kinds of deals that we're offering is really interesting. Because one, it's right up their alley, but two, the returns are 2 to 3x sometimes, typically what they're seeing, which is a lot of fun. And there's a mission behind what we're doing, instead of just going out and developing to make a bunch of money, which, hey, we're going to make money, but there's also, so much more behind what we're doing. So when Adam came in and interviewed with us, he told me this story that still sticks with me to this day. And I want to dive into this because this is what honestly sold us on bringing you on board. He's sitting in there talking about, and he hands this chart to me, and I've never seen anything like it before in my life, and I'm not even going to pretend to know what it was. But he's like, yeah, we determined that the number one driving success factor for a Tractor Supply was tractor grease sales within a county. And you start to think about that, and you go, well, of course, it's Tractor Supply. They're dealing with people in the country that, the tractor's grease is going to be a huge determining factor as to whether the store is successful. But how many thousands of SKUs does Tractor Supply have? And,
it's millions.
Yeah.
Yeah. And it's actually, so we want to dive into that principal component. So anyone that's listening now, I'm telling you, the two key things that you could just take away from this Just throw away the rest. Just principal component, random forest. They changed my life. It's been a statistical tool in the bag since the old IBM models.
Can you explain a little bit of what that means?
Yeah, so principal component is it's trying to derive whatever you're trying to model for. So for most businesses, it's going to be sales, it's going to be profit, which we can get into. Profitability is a little bit different than sales. So top line, bottom line, keep those in separate bins. There's a lot of some people they're incentivized by what their bonus is modeled for. So for merchandisers, right, top line is going to be their core. They don't really care so much about bottom line. For most operators, in my mind, as a finance, bottom line is always going to be the model of success. Which, again, sorry, I'm bobbing and weaving over here. If you're in a growth stage, right, top line's always going to be kind of your focus. But back to principal component, that's where sometimes maybe I wander a little bit. Principal component is going to give you the key levers that quite literally move the needle the most. So in the beginning, actually what got me into finance was trying to understand from merchandising was what actually pushed sales the most, or at least what were those principal drivers to be able to start understanding categories that quite literally were the biggest theme. Ran PCA, and then did a random forest, and lo and behold, you have these very tight clusters that sometimes they call it data mining for a reason, because for the most part you're kind of digging in the blind, praying that
Hoping you stumble across something.
yes, that there is, for whatever reason, that the millions of people that come into a store, in this case Tractor Supply, have a core theme. And in this case, yes, it was grease and equine buckets. We can actually get into the secret sauce at Tractor Supply. Anyone out there wants to start up a farm and fleet, we got it. Yeah, these actually, and it really came down to 4 main SKUs, which made it even more unbelievable. And then, I don't want to dive right into it, but that's what then led to, and this is where anyone watching, a small thing, a nugget, can turn into quite literally tens and tens of millions of dollars in capital expenditure. It started the Hadoop cloud-based modeling at Tractor. At the time we were running this, it was Netezza. And then, we built the actual recommendation model. A whole CRM team was built overnight. Completely new marketing division. I mean, it was wild.
That's amazing. From those few data points, they built this entire...
From one regression model, one nugget, and not even a nugget, I would call it a flake in the pan, right? Because you got to keep digging to find that vein. That was the flake in the pan that's like, yep, I'm going to spend the next 3-5 years, they're still digging to find that vein, because this is the flake that's worth digging for.
So if you bring that back to real estate, I mean, the number of data points that we think about, that I think a lot of us have a gut intuition when it comes to, hey, I'm buying this deal because it's in a great area. Well, what makes it great, right? A lot of us kind of have that intuition, but bringing it down to what Adam is saying is like, let's throw some science behind it. What is the zoning? What's the drive-by traffic? What's the daytime population? What is how many number of residential permits, renovation permits have been pulled within a 1-mile radius in the last year? It's data points like that if you can figure out why that project was successful, you can then replicate it time and time again based on data and science, and not just a gut feeling, I think that this will be good. Because I would think, especially with the kind of real estate that we're doing, residential permits, like renovation permits, has to be a pretty big determining factor into the success of commercial real estate in some of these areas because we're going into emerging corridors, right? And residential always beats commercial to the punch. So, well, we're obviously working on all of our different data
Yeah.
points and the kinds of things that we're going to be getting into. But now I'm starting to think about it. I'm like, man, maybe we
See,
need to look into how many residential renovation permits are being pulled in a specific area.
and this is where we gotta dig. So this is out of domain expertise. So domain knowledge is one of the three legs of actually getting into the science of data. Is mathematics is one. I feel like we got that. Domain knowledge you got, and then sometimes it takes at huge scale. Somebody who can put up a stack.
Yeah, that's right.
And yeah, the three legs though. Domain knowledge is always one. So one of the core, one of the reasons for success, I call it serendipity, is I happen to grow up in the country. I happen to grow up outside of one of the original stores, one of the first 300 tractors. Uh, and for whatever reason, it was an outlier. In its success, it did not make sense. And the population density, the median household income, all these factors that should kind of, kneecap it. Back to the Corleone.
Yeah.
Should kneecap it, didn't. And again, that's where intuition is it's going to lead you down the road of this makes sense, why I should dig here. And observation. Biggest keys is go with that gut feeling, because people that actually know the business they're the people that they're gonna get you on that lead. They're your bird dogs,
Yeah.
right? They're gonna tell you. They might not bring it back to you exactly the way you need it, but
Yeah, close
just right there,
enough.
riffing is these are data points that as we aggregate them, we're gonna become more and more successful because we can back test and then we can find, a good analyst is somebody that finds value in superficial failures, what I call it.
Yeah.
Is in the quite literally, people will throw away something as a failure when they miss the bigger picture, right? It's the forest and the trees. We talk about it a lot here.
Yep. Yeah, we talk about that all the time. I think Tractor Supply is a really interesting case study for that as well because they started off taking those old Kmart stores,
Yes.
right? So it was kind of a gut feeling like, hey, this store that we did in an old Kmart worked out really well. Let's just keep doing that. And they replicated it to the point where they ran out of Kmart stores.
They did.
So then you guys just went in and started analyzing, okay, well, what makes the top 10% stores successful? And then you started using that data to go to the next one. And I think, we as real estate investors should all be thinking of what data can we pull away from every single one of our investment properties that was successful and that was a failure, honestly, because you can learn just as much from that as you can anything else. But why was it successful? Of course, get rid of the gut opinion. We all know that it's probably going to work, but why?
Yeah, wouldn't it be great if we all just had a giant stack of money and could buy high rises in the middle of town and just be like, yeah,
Yeah,
we'll get our 7% return and double it up every decade.
be amazing.
Yeah, easy peasy, right?
Yeah, unfortunately, most of us do not have that option.
Yeah. And at the end of the day, it's you want to. The more active you are, the more you vet things, the better returns are just going to end up being.
Yeah.
Right? Is passively throwing it into some index fund is never going to return. Actually knowing the person you're giving face to face your money to, right?
Right. Well, and being able to go, if you're raising capital like we are, we're always raising capital from friends and family investors or just, mom and pop investors, to be able to go to them with the data and
Yeah.
say, and banks too. Lenders want to see this kind of stuff too, to say, look, here's our last project. Here's why it's successful. Here's all the data points that had. Here's this project that we want to do now. It shares all of these data points. You should invest with us. We think
Yeah.
that this is going to be successful. It's more of instead of just a story, you actually have the facts to back it up.
Well, Peter Drucker, the most famous logistician, his best quote ever was, "Without data, you're just another guy with an opinion." And you know what
That's a
those
good
people
one.
are, right?
Yeah. Wow, that's good.
Everyone's got one.
Everyone's got an opinion. So tell us about working at a family office. What was that like? What did you learn there moving from Tractor Supply to a family office?
It takes a whole lot of people to spend $1 billion.
You know what they say, if you want to become a millionaire, start off as a billionaire and buy an airplane company. So
Yeah. No, hey, as a great philosopher once said, Mr. Biggie Smalls, mo money, mo problems. No, great family. I learned that, yeah, it's complicated. Uh, Everyone wants something from you. At the end
Yeah.
of the day, everyone wants something from you. You have to learn to say no. But then generational wealth is there's being rich and then there's being wealthy,
Yeah.
right? Rich is the Rolex. Rich is apparently now the NFT
Oh,
Bored
gosh.
Apes. Ouch.
Don't even get me started on these fungible tokens,
The metaverse.
which we're going to talk about here in a second too.
Yeah, we'll get into that. But being rich, it's a flash. Being wealthy it's a glacier, right? It's the under the surface,
Yeah.
grinding, safe plays, preservation. And I can tell you right now, man, real estate, that is best performing asset. No offense to those people out in New York trying to just rob you with fees, but unless you know the company you're buying, passive indexes, unless you truly believe inflation's going to be a huge theme for the rest of your life, which is counterintuitive to having a hard asset, then
Right.
passive investing is the fees are going to handicap you over the scale of your life.
Let's talk about inflation, because that's a conversation you and I have been having for the last few
Yeah.
weeks. I mean, why is inflation good for real estate?
So inflation is good for real estate because it props up assets. And at the end of the day, you're going to be able to pass on whatever that I mean, that's why land leases are, we don't want to talk about those right now, but land leases, you have to gauge for inflation because at the end of the day, whatever you're indexing to, wages will have to rise, either that or politicians that are in office, your living index will deteriorate significantly if what you're putting into where you live and the cost of everything that's around you does not scale with land.
Right.
I mean, quite literally. I mean, it's one of the largest drivers of the PPI is a lot of the cost inputs. It's the best hedge, hard assets. At the end of the day, I don't care what anyone says because that is the one thing that will forever hold value. Right? At any
They're
point,
not making any more of it.
not making more of it. And at the end of the day, you always have to have a place to rest your head. You always
Yeah.
have to place to live. Was it Maslow's core?
Oh yeah, basic needs.
Yes. So you're investing in a basic need to live. So for one, that's always pretty safe haven.
That's true.
That
That and alcohol,
yeah.
whether the economy's
Vice.
up or down.
Yeah. Yeah. We'll talk about that on another podcast, but vice indexes are pretty safe too.
Yeah, I mean it's interesting to dive into what's going on. I mean, because the United States has printed so much money this past year that of course we're going to have inflation no matter what. And you've been telling me Goldman Sachs is basically right off the bat next year it's 4.5% inflation no matter what. Which, if you're in real estate, is actually a really, really good thing if you are locking in your loans today. Because if you lock in a loan at today's rate, that's it. It's finite. It's locked in. You've got it for 5 or 7 years, whatever your commercial loan is, right? But next year, your dollar is worth 4.5% more.
Yeah.
I mean, you're significantly outpacing the amount of debt that you have on the property. So, I mean, unless you've got it not locked in which case it adjusts to the consumer price index or whatever that ends up being, then you might, not get to benefit from it. But man, you lock in a 5 or 7 year term right now, you're looking pretty good over the next few years.
Yeah, I'll go on the record right now. Yeah, the biggest loan you can take it. This is going to be, we're at the sweet spot. There will not be a better time to get a long-term loan than we see right now. Quite literally, interest rates are way too low. I'm pretty sure the Federal Reserve, well, you're already seeing it, is Jay Powell. He got reelected, and what do you know? We have to take, literally just a couple hours ago, we must take the term of transitory out of the language, already signaling, the markets are reacting, that inflation is not transitory and that the Fed has misstepped. They should have hiked rates long ago and they printed too much money. Yeah, now's the time. If you can get a loan, lock it in, and especially in real estate, you will print money because at the end of the day, you're going to be able to pass it off because wages will have to rise. We're seeing it, Chipotle, across the board, wages are rising. Sweet tea I love. It is now $1.29. That has always been my canary in the coal mine. It's ridiculous, yes, but
man, the Arizona,
and that's where it's like if Costco hits,
they haven't raised prices in like 150 years.
Yeah, it's been a very basically our entire lifetime. As soon as Costco rotisserie chicken goes up, tell you start buying gold. But no, get off the tinfoil hat.
No, I love these. Adam will go on these tangents where he like starts talking about price parity in other countries too, and he's like, it's all based on Big Macs. How many Big Macs can you buy in a country? That's all that matters.
Purchase power parity. Yeah, if you want to go on vacation, just DM us. I'll hook you up. With a very good list.
Russia's pretty good right now.
Russia, the ruble is. Oh man, Rasputin is rolling in his grave. Poor guy. Russia is great. If you are all right
around the fact that it's Russia.
Yeah, political sanctions, but man, those Slavs, I got some Slav in me. We're very utility-based people. But no, Russia, a great place. Poland, also great. You won't risk political sanctions there, so maybe go there. The Black Sea. 5-star resorts are like $60 a night. So
that's so crazy.
And you even have a little babushka that'll cook for you every day.
I love that. Julian's jumping in the podcast. Long time no see, Julian. Great podcast tonight. Appreciate it, man. So taking this into analyzing markets, right? Obviously we're doing deals in Nashville and Chattanooga. How do you're just starting to study and learn Chattanooga, right? We've been in Nashville for a while. What do you look for if you're exploring a new market? What do you start trying to study? What do you try and learn about it to determine whether or not that's even a city worth investing in?
So, I mean, for one, these days, the political atmosphere is how business friendly are you? I mean, that's what I'm looking for. I think that's probably principal component one is, are the people willing to, are they going to just try to regulate you out and just cripple you as a business leader? I mean, you're seeing that Blount County, love that place. I think they're going to do great things just outside Chattanooga. They're about to have an international airport that's going to compete with Charlotte. Business friendly. They just got Smith & Wesson game changer, and that's all it takes.
Yeah.
Is right, Massachusetts, Taxachusetts, as we call them here in Tennessee. uh, yeah, it's how radical are the politicians, right? So I think it sounds crazy because that shouldn't even be a consideration, but today it
But
is.
it does. I mean, if you think about it, that, you look at what happened in Atlanta and Georgia over the last year, or Detroit and Michigan, right? I mean, you had a lot of these, very at odds politicians that created honestly a negative business environment for everybody,
Yeah.
right? And so you do want to go into a place that has a stable political environment because it may make the difference as to whether you can get something passed or not, right? If these politicians are working to just get reelected because it's so strenuous and it's a tough market, then they're not going to work with you on a rezoning. They don't care,
Nope.
right?
Yeah, you're gonna get rug pulled.
Yeah.
I think, and again, at the end of the day, is we like the top side from inflation as a hedge. Right, it's the safest asset class, maybe outside of gold, but gold, you don't get good returns on gold.
Yeah.
So you want to mitigate risk, and political risk seems to be, in my opinion, I mean, outside of Ebola crossing with COVID and Cavola.
We came close.
Yeah. Outside of that, I feel pretty good that political risk, that's top. You also want to see a diverse culture. You want to see a net positive influx of people. That right. The number one theme is growth. So that's probably number two on my principal components. I know that's kind of what I was looking at a long time ago. Once I started, the family office was trying to look at, what are the patterns. We have a new census coming out. It's still, all the data hasn't come out, but the key thing that you're going to be looking for is high income earners. You're going to be looking for growth. So for me, I always like to look at colleges. Just because you get I call it inorganic growth. That's the number one booster. You're seeing Murfreesboro, right? Murfreesboro's, it's not Nashville, but
It's growing despite itself.
oh no, it's blowing up, and it's quite literally
Yeah.
because of the college, right?
Right.
It's inorganic growth. They go there, they like it,
It's the biggest university in the state of Tennessee.
and it's easy to just transition over. I also like Conroe, so I want to get on record. Conroe, just north of Houston, and of course Salt Lake City. Those are my two favorite outside of
Oh, you're gonna
Nashville.
throw Conroe and Salt Lake City into the same sentence?
Yeah. Well, no, I mean, we're talking Tennessee. Long term, Blount County, great. I think they're going to kill it. High end, oh, it's going to be a fantastic place for boutique. Maybe.
All right, well, let's go buy some stuff in Blount County.
Yeah. Hey, any big money guys out there? We got an idea for you, Blount County.
Tell us about Blount County.
No, outside Nashville. First, Nashville's our focus. But yeah, 10 years down the road, Blount County is going to be a great place, in my opinion. We'll have the hard, raw data here at some point as soon as census comes out. But yeah, I think it's interesting because back testing the old census, I always thought Conroe is going to be a place that's going to be pretty unique. And that's outside the urban core, right? Because we don't really want to predict urban cores,
No.
just because it quite literally is what corporation moves to the urban core.
It's pretty much the only determining factor because it's so expensive and you have to build towers.
Yep.
That's why I've always loved operating in the urban core adjacent. Like Oracle just announced a 65-acre, 8,500 employee campus, and we didn't have to have anything to do with it for us to benefit because all of our projects are right down the street.
Yeah. Well, actually, I think we're going to benefit even more so than the core, just because culture. I'm sure that'll be something we talk about a lot. Culture. It is in where we operate.
Yeah.
You can't put a dollar value on it, but there will be a dollar value attached to it at some point.
I mean, culture is one of the biggest reasons that Nashville's done well.
Yeah, I mean, that was the first flag planted, right? It was a
Yeah,
skirmer horn, and the Turner family graciously planting both the skirmer horn, helping that out, and
it's
then
huge.
yeah, and then the Country Music Hall of Fame.
And country music in general.
Yeah,
Which is funny enough. I mean, I grew up. I was never a big country music fan. Couldn't care less about it. It's probably because I'm from Nashville. But you look at the culture that is created. I mean, Broadway is now as much of a destination, it seems, as Vegas is,
yeah.
right? I mean, Vegas is spread out over several square miles, and Nashville's tourism is almost a 4 block radius, which is crazy to think
We're
about.
top three in weddings, so think about that. Is you have Pigeon Forge or Gatlinburg, Vegas, Nashville. So I mean, that's wild to
Pigeon
me.
Forge?
Yeah, Pigeon Forge. They're number two in hotel density outside of Orlando,
I would
Disneyland.
never have thought that.
Oh, and I remember going there as a kid forever. I mean, when I was just a kid, and there were 6 hotels, and now is just Disneyland outcompetes them. Not even Disneyland, California. Got more of them.
No.
Yes.
Florida. This is what I love about having somebody like Adam hanging around us. He's full of so much ridiculous knowledge. I mean, earlier he quoted Biggie Smalls on the podcast, but he was quoting Jay-Z earlier. He was like, as a great philosopher once said, going into
Sycamore
exactly
tree.
what we were talking about. Yeah. Yeah, because this table's a sycamore tree, so of course he had to quote Jay-Z. But
Yeah.
another thing that Adam is doing with us is underwriting all of our projects and building out our models because I used to obviously underwrite every single one of our projects with spreadsheets that either I had created or I'd taken from somebody else and modified a little bit, but I didn't have the background of really building out those models like Adam has. So what have you learned so far? I mean, what's interesting and what do you look for when you are underwriting these opportunities to make sure that they'll probably be a good investment?
Yeah. So I think with COVID and with anything, right, is the most appealing part of real estate is that it's safe. To be as pessimistic as humanly possible.
To beat the hell out of a deal.
Yeah, is to just say, what happens if quite literally everything goes wrong? The contractor takes 3 years.
Yeah.
We start hitting balloon interest payments. Our interest rate is loan shark. Can we still operate? And then we're still at 50% what, right? Somebody who's got a vision thinks we can be.
Yeah, so stress testing.
Yes, is just being doom and gloom.
Yeah. So how do you do that when you're like diving into the underwriting?
So for me, it's I want to always see, right, is look at the people that are experts in the field. So we have a hotel operator that's done 32 different deals. He's very successful, right? Probably living in a nice place down Brentwood. I look to him to say, what does he think this is? Right? He's my bird dog. Domain expertise. We talked about that
Right.
earlier. It's one of the 3 legs. I'm not an expert in this field. As time rolls on, right, I'm going to have a nice ledger of data to be able to lean back test, look for those outliers, say, maybe this is a place. But for the most part, lean on them to understand what they think it can be. And then quite literally look at, okay, if this is what down the middle road looks like, where do we get to break even? Because if we can stomach where break even is, then let's look at it even further down this way and think, is that realistic to think? Unless there is, they call them gray swan events, COVID.
Right.
Right. That puts you out. That's not on you. Right. I mean, that's very bad luck and terrible timing. So the people, and that's where you almost hope is some of the people that, man, just had some bad timing a couple years ago as operators. You always hope that they have another swing at it.
So you're going in and you're looking at, hey, what if the rent comes in 20% lower? What if our occupancy goes down 5%? What if our operating expenses go up? I mean, what else are you kind of taking into account?
Of course, interest rates.
Yeah.
A lot of stuff is terms, average, what we think we're gonna get per square foot. So there's a few levers, but at the end of the day, it all comes down to the standard distribution graph, right? Is we know
The
interest,
the bell curve.
yeah, the bell
Yeah.
curve. We've been talking about a lot here. I'm getting them all learned up. Uh, and that's what the gray swan event we talk about is. Becoming a black belt in lean manufacturing, they call it Six Sigma. That's why we talk about it a
Yep.
lot. One of our deals,
The Toyota way.
yeah, we are a Six Sigma deal. We won't talk about that, but we're above that. Gray swan events, right, is if you stress test it to 1 in 1 billion, and that's where, as we build this database that we're building, we'll be able to understand, yeah, this is not a Six Sigma. Even at Six Sigma, we can still operate. But yeah, it's those principal components, right? It's what's your average square foot price? What can you get? What are your deal terms? So APR, and then a lot of it's kind of the finagling of the finance, the debt stack. And at the end of the day, what is your occupancy? I mean, whatever deal it is, those are the first three things that are gonna really drive forecasting, and they compound over time. As much as I'm working on my blue orb,
Yeah.
all the memes out there, pondering the orb. I feel like sometimes that's what I'm doing here, pondering the orb.
Dude, it's so funny thinking about our process now for analyzing and underwriting these deals, because the first project that we ever did was literally like back of napkin numbers for me. I said, okay, well, we can buy the building for $575. I think I can rent it out in 12 to 18 months for this rate, based on what we'll be paying for the the loan after debt service. Here's what we'll make. And the two guys that I took that deal to, they're like, yeah, okay, we'll invest with you on that. And now, which is crazy thinking back on, because the level of underwriting that we do now is like 10 pages of Excel spreadsheets
Yeah.
that are just incredibly complicated, taking into account every single factor. But now we're doing $17 million deals instead of $575,000 deals. But I mean, do you think that you could possibly get away with not underwriting a deal that size?
Ooh. I feel like you'd have to have quite the conviction and maybe a briefcase at the
Yeah,
meeting with the
have enough
banker.
money.
Like, here you go. Maybe some tickets to the Beatles. I don't know.
It's so true. I mean, once you get to a certain level of sophistication,
You have to.
you have to. The banks won't
Yeah.
even look at you if you say, "Oh, I didn't underwrite it. I just here's my gut feeling." They're like,
No.
"Get out of here."
No, in the real estate, right? So you think, all jokes aside, right? Joking a little bit, it's risk on risk, right? So real estate, we have fiduciary responsibility to be good stewards.
Yeah, for our investors.
Yeah, that we're not just craps rolling out there, and yeah, we're gonna throw up a
Just
50-story
take a
building.
chance. I have a gut feeling this will work.
Yeah, I mean, if you're gonna ever go to the craps table, real estate is it's safe, but then on top of that, banks, they're quite literally their only thing they look for. They don't even care about return, is risk.
Yeah,
That's it. So it's like you have to go through two levels of risk.
that's literally the only thing they care about.
Yes,
Risk.
it's
How
no
do we
upside.
mitigate our risk?
Yeah, they don't care because they don't get a part of the upside.
Right.
We put in a hotel that is just the hottest spot, since
They
sliced
still get their
bread.
5%.
Yep, that's it. They don't care as long as you don't go bankrupt.
Yeah.
And
Just
so,
pay me every month.
and unfortunately, that's where they're looking at the 6, 7, and now, unfortunately, you would think. So we always talk about. I don't want to get into limbic brain thoughts. That's a real
The
tangent.
lizard brain.
Yeah, lizard brain. I love thinking about it. Biologically, what trains us to think, why we think what we think, biases. I always look at lenses that we make a lot of our decisions through. We all have a bias, but one of them is that we like to our brain is trained to forget bad things. Unfortunately, for most people, right, is when you're trained for risk, you only think about bad things. Uh, but yeah,
It's a double-edged sword.
yeah, we always want to remember the good times, it- mainly because there's a lot of theories on it, but one of them is, of course, childbirth, right? So you just have to forget that, otherwise, maybe you wouldn't have more than one kid. So it's like, boom, they think that's pre-trained into us in the mammalian,
Interesting.
Yeah, it is wild, right? When you start thinking about that, and that it's just trained in all of us to forget pain. And it's wild because bankers, they only want to think about pain.
That's how I am with tattoos, man. I always forget. Like I'm like, oh, it wasn't that bad. I'll go back and get another one. And then as soon as it starts, you're like, oh man, we
Remember.
got 6 more hours of this.
It's wild though, right? So
That's so true.
It's always good to remember. Whereas, like, yeah, sometimes you're willing to go back to pain,
Yeah.
because you're willing to forget it, and it's just trained into us.
That's crazy. Well, we've only got a few minutes left before we've got to go. I'm actually going to a Preds game tonight, so I've got to get out of here in a minute. But if you're joining us live, if you're joining us live, you have any questions for Adam, feel free to drop them in the live chat. We'll get over to those for sure. Adam, one thing that I want to kind of close it out with, if we don't have any questions, this past week you sent me what I think is the dumbest transaction that has ever occurred in the world of real estate ever.
Yeah. Yep.
Somebody paid $2.4 million for real estate in the metaverse.
The metaverse.
Which is a digital universe that doesn't really exist.
Yeah, ridiculous.
Explain that to me. How does that even work?
Either one. So this is, I told you about the sweet tea earlier. This one, if there are signs all out there. I mean, Jay Powell, he finally told us, but inflation. I think there's so much liquidity, and I don't know if people are getting bored.
Or they just need a write-off because there's no way that's ever going to make any money.
I don't know. Maybe rich people are getting so bored that they think this is next. I don't. It's fascinating to me.
$2.4 million.
Yeah, and I found the one take because I was like, well, I got to learn about the metaverse. I mean, it's pumping a lot of. If you want exposure, AMD. I've been calling AMD and NVIDIA. Family also worked for. Telling them all the time, it's the best exposure to crypto, metaverse. Well, now metaverse, and that's what's pumping them. They've been, but yeah, if you want exposure without the risk, those are the two stocks. And you come talk to us, we'll tell you all I'm a big Levi Strauss guy. He's one of the greatest investors there ever was. Levi jeans. So during Gold Rush, sell shovels. You might be at 1 out of 100 that buys a plot of land in the metaverse.
To the gold.
Yeah, sell the components. But the metaverse, I found one take online. Is it the zeitgeist? That's a conviction you have to pay almost $3 million. I personally don't see it. So it's a hot take here. I don't like to put my convictions.
I mean, it's just interesting to me that somebody would pay $2.4 million for a digital piece of real. Like, what do you get out of that digital real estate? I mean, why would somebody rent it and pay you any money? Somebody else buy that in the future? I would imagine based on the IRS code, you can't appreciate it, so there's no tax benefit other than writing off your initial.
Well, even if they lose money, right, that'll be lifetimes of you're only able to write off $9-10 in capital gains losses in stocks, which I'm sure that they're going to categorize the same vein whenever they. Personally, I think it's laundering. Super hot take. Yeah. I'm quite positive that this is how either you're laundering your money. it's the only rational thing that I can think of.
It's like the same reason that all these tire shops and used car sales lots exist on Dickerson Pike in Nolensville. You're just like, there's no way that this many people are buying used cars and going to tire shops.
Yeah.
But they're littered everywhere. And they're selling drugs.
Yeah, they're just slowly leaking money out. Money laundering, I think, is NFTs. Outside of the few that have become, right, the Bored Apes, we talked about them.
Yep.
They're kind of like the feng shui Rolexes, I guess. I don't know. A lot of people talk about screenshot, and there's rants online. They're hysterical about screenshotting NFTs. But no, it comes down to, though, if you're going to invest in them, so anyone out there that's bullish on them, we'll give you the bull case, is if you believe that, I mean, right now we're on a digital platform, you know, Tyler's followers are kind of his clan, is the zeitgeist of today that your digital life is as important as your physical life. That's where it's quite yin and yang. We have a good little bit of both, right? Is Facebook, and then you think the millennials, Gen X, they grew up in the digital world. Gen X somewhat. Gen X, any Gen Xers out there, God, you guys are very Taoists, because you had a childhood analog, and then quite your entire adulthood has been digital. So they're very conflicted. That's where I don't think that they're going to be adopting this.
Yeah. Older millennials were kind of on that cutoff too.
Yeah.
I had
Flip phone.
tapes and a CD
Yep.
player, and
we at least knew the internet since we were children, though.
Yeah.
That's the one.
That's true.
The
That's actually very
difference
true.
is I remember.
AOL dial-up.
Yeah.
Mom, get off the phone.
Great equalizer. So I'm a huge. The internet is. It's one of the greatest things that have ever happened. Just because it's the equalizer. Growing up in Crossville, if it weren't for my dad dropping money on the computer compact, or no, it was Gateway.
Wow.
Yeah, a long time ago, and thankfully we were close enough to have decent internet, but it gave us the access to the world of knowledge that just was not. It wasn't in Crossville.
So true. It's like the modern day encyclopedia.
Yeah.
Right. I mean, you think about having that 200 years ago.
Yeah, think about it. I mean, when you were small, like the encyclopedia was, you had to go there.
Yeah.
Right. The running joke on the internet.
This was before Google.
There's a tweet. It's like, yeah, man, back 30 years ago, if you want a picture of a raccoon, you'd have to either have a picture of one or go to your local library. You want a raccoon with that funny hat on? Just forget about it.
Not a chance.
Not a chance.
That's so true. We take the weirdest things for granted today on the internet.
So that's where bull case for metaverse. I think the bear cases outweigh the bull, but yeah. Is it the zeitgeist? I'm not so convinced.
We'll see. That's really interesting. Well, Adam, thank you for joining us.
Thank you.
Appreciate you coming on. Hopefully, guys, we'll actually be starting a new series here soon. Likely once a week, Adam and I diving into a news article or something that we've been working on, talking about, and analyzing for you all, so that y'all can kind of get an idea of what we've got going on. And also just so that we can talk about some really interesting topics that I haven't gotten to share on the show before. But let me know what you think in the comments. I want to know, do you think real estate in the metaverse will take off, or do you think it's a total scam and people are just laundering money? I genuinely want to know your opinion. Let me know. Otherwise, we'll see you guys next week. Thank you for listening to the Commercial Real Estate Investor Podcast, brought to you by Hamilton, your resource for passive real estate investment opportunities. Visit www.investwithhamilton.com to start building your passive real estate portfolio today.